Coinbase reported earnings after the market closed on Thursday. As I'm recording on Friday, the stock is up about 16% during trading. So the market absolutely loved what they saw, and this continues really strong momentum for Coinbase. The stock has nearly tripled over the past year, and it looks like, given the momentum in the industry, there's still a lot to like about the company's future. You have ETFs coming that was not included in 2023 results. And Coinbase is the custodian for most of the ETFs in the US. So there's going to be revenue coming from that. We still don't have clarity from the SEC on not only the Coinbase lawsuit, but also are there other ETFs coming to the market? We still haven't seen major adoption of crypto rails for things like payments, but I think that could be coming in the future. So there's a lot to like about Coinbase, and the financial results are really strong despite the fact that there's so much potential growth for this company. So I want to dig into some of the results and give my perspective as a shareholder on what the company reported and what we should look for in the future. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's go right to the report. This is the snapshot that Coinbase gave, just an overview of 2023. Pretty volatile year, and things got better throughout the year, but did have net income of $95 million for the year, total revenue $3.1 billion, and debt was down 12% for the year. So about $3 billion worth of debt, still has a net cash position of a little over $2 billion. So really strong financial position for Coinbase coming out of this crypto winter, which it seems to be thawing. The high-level results are right here on the right. Q4 revenue, $905 million, net income $273 million, and adjusted EBITDA $305 million. This is a bit more of a breakdown of where that revenue comes from. So you can see that the top section here is transaction revenue. So this is the exchange business. This is people paying fees to buy and sell cryptocurrencies. A vast majority of that revenue is coming from the consumer market. This has always been the case for Coinbase. They generate very high margins in the consumer market. We'll get to some of the trading volumes there, but they actually do a lot more volume on the institutional side, but very little revenue generated from that side of the business. So $492.5 million in revenue, and that has just been picking up throughout the year. There's a couple of things to take away from that. One, there's just generally more activity buying and selling cryptocurrencies. So that's a tailwind for Coinbase. The other thing is you don't have FTX in the market anymore. Binance has lost some market share because it had to exit the US market. So Coinbase, which has been a much more conservative exchange over the years, took a long time to get into things like derivatives, has now started to expand its market not only in the US, but also around the world. And it's done so in a legal way. And I think if you're a public shareholder, that's exactly what you want to be looking for. And this is one of the risks for companies like Binance, is that they operate in a little bit more of a gray area. So this is why Coinbase has grown a little bit more slowly than some of those competitors, but I think it's absolutely the right way to do it long term, and that's proving to be the case. Stablecoin revenue, $171.6 million. This is from the USDC token. They previously owned half of the consortium that ran the USDC token with Circle. They have now given Circle full control, but still generate a lot of revenue from the USDC token. So that's what this revenue is. Blockchain rewards continues to go up. Interest income, this is just interest on the $5+ billion in cash that's on the balance sheet, and then custodial fees and other subscription revenue. So subscription and services improving to $375.4 million. That's how you get to your net revenue, up about 50% from a year ago to $905 million. Here's that trading volume I was talking about, and this is where you can see the disparity in the fees. Just $29 billion in trading volume from consumers. Institutions did $125 billion in trading volume. But remember, consumers are generating far more revenue for Coinbase. So that's really where a lot of those fees come. I think this is interesting. This has been a trend that we've seen for quite a while now. Bitcoin and Ethereum becoming a smaller and smaller portion of the trading. USDT, so Tether, has now showed up as one of the tokens that they're talking specifically about, and then about 42% of volume falls into these other crypto trading assets. So this is what we've seen over time, is that the number of tokens that they're trading and where revenue is coming from more diverse sources than they used to. Subscription revenue as a percentage of total revenue, this is exactly what you want to see. This was obviously the boom times during the crypto bubble, but over time, you want to see subscription and services revenue start to be a bigger and bigger percentage of the business, and that's exactly what we saw during 2023. Now, keep in mind that a lot of that revenue is from the USDC token. So that's not necessarily a foundational piece of a business, but obviously a very valuable piece of Coinbase's business today. The other big change that Coinbase made over the last couple of years was they were one of the first to make major cuts in operating expenses. So did a number of layoffs and really cut their head count. That is the reason that you're seeing operating expenses come down about 50% from the peak in Q2 2022, up a little bit, and they're actually a little bit higher than management expected, but that was partially because revenue was much better than expected. So they spent a little bit more on operating expenses. But this is exactly what you want to see, is operating leverage from a business like this. They have to keep those operating expenses relatively low, because otherwise, if revenue falls like they did in 2022 and early 2023, then your business goes to losses really quickly. So got to contain these costs, and we'll see how quickly management picks up any spending, because they do have the money to start developing more and more new products with the balance sheet they have, with now net income and free cash flow coming into the business, but obviously want to be a little bit conservative with that. The final thing I'll go through is the cash walk. They include this every quarter, and it's always just helpful to see where cash is coming from and where it's going. Adjusted operating cash flow, $292 million, so you have positive there. You have a little bit of capital expenditures and M&A activity, bought some crypto and investments, sold some crypto and investments, sold some financing products and collateral, repurchased a bunch of debt, and had net negative equity transactions. So this is the kind of thing that you want to see. If you have cash flow coming in, reduce that risk, reduce debt, and put yourself in a better financial position long term. That's one of the things that Coinbase has been working slowly on over the last 4 quarters or so. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Now, these results were surprising to Wall Street analysts who had expectations for about $100 million less in revenue and earnings to be about flat. And earnings were a little over $1 on a per share basis. But I do want to caution a little bit from reading too much into that. It doesn't seem like analysts were really updating their estimates all that much, which is a little bit strange, because we knew with the volume pickup in the cryptocurrency that Coinbase was probably going to have a really good quarter on the exchange side of the business. So that's one of the reasons that the stock has been up over the last couple of months, but analyst expectations hadn't changed. So just want to caution there a little bit, reading too much into analyst expectations. I would expect some of those expectations for 2024 to probably increase as a result. And it seems like there is a lot of momentum in the cryptocurrency business. But what I'm looking for in 2024 is more and more of these use cases. Things like the base blockchain being used to have basically feeless transactions. This is where I think the ultimate upside is for Coinbase, is using invisible wallets that people have and moving to crypto rails. So instead of using something like credit card rails, move to cryptocurrency rails, where it's actually cheaper to make a financial transaction between a business and somebody who's buying something. That's where there's fundamentally disruptions from Coinbase and in the crypto industry. And we still haven't seen a lot of those things go mainstream. So there's a lot of potential growth there in a company like Coinbase going mainstream. And now this is really one of the only solid financial players in the industry. A lot of the other big names like OpenSea, obviously FTX, have run into their own financial problems. So Coinbase can invest while everyone else is having to pull back. So I think this is still a really well-positioned company. Stock I've owned for a while, up a ton over the past year. But I still think there's a lot of room to run higher, maybe volatile over the next couple of years. That's just the way this stock has been, and that's what typically happens with growth stocks, but definitely not one I am selling right now. What do you think about Coinbase's quarter and what they have in the pipeline? Leave your comments in the comments section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.